All right. Hello, everybody, and welcome to NanaTalks, the podcast which is connecting two major dots, small businesses with money. And today I'm talking to Sarah Romanko. She has been active in startup ecosystem since 2019. Since June 2023, she's actively pitching and joining the different VC and startups related conferences, and she's talking about pitching, funding, investing. So basically pick any topic and she's going to be there. That's why I really, really believe that you will fall in love exactly as I am into Sarah. Sarah, welcome.
Thank you. It's great to be here.
Thank you again for joining me. All right. So if you're good with that, let's jump right into like hot topic. So I've just had a call, my God, yesterday, I believe, with the folks who are building great startup. They are working with the Salesforce related documents. And like both of them are architects, senior architects. So they have like 20 plus years each of experience. But when we've talked about like the ways how they can get funded, for me as the startup founder, that was super obvious to say like, have you talked to any like accelerators, incubators, VC-related folks? Because what you're building seems very scalable. You're solving a great problem, and there is a huge TAM for you. And they were like, huh, what is that? So they had no idea, even though they're from the tech-ish related world, that there is such thing as VC, incubators, accelerators, this whole ecosystem, and that they can leverage it. Because like originally they came to me to ask whether there is some kind of a support programs, grants, or loans available for them, which is absolutely the case. But at that moment of a time, I thought that venture capital might be the best option. So like, how are you bridging these gaps?
Absolutely. So bridging the gap for non-tech founders.
Yeah.
For sure. So I think for me, what I've noticed a lot is I've worked for several different VC firms, like ones that are focused on tech and ones that are focused on non-tech. And a common misconception among founders is that they have to have a tech startup to get funding. And this is something I really want to dispel because, there are different types of VC funds. There are actually some funds that only invest in physical products. And so I think this is great for founders because you don't have to be what you would consider a tech founder. In fact, the firm I worked for previously, we prided ourselves on investing in nerdy founders. And by nerdy, we meant anyone who knew how to build a product or create a service. So it didn't have to just be tech. And so I think for founders, in terms of what's important to kind of answer that part of the question is, when you have a physical product, getting traction is very important. And so when you look at what are your sales, how many units have you shipped out, that's something that's very important to investors because it's a product and you want to see that you can actually scale it very quickly. So, it doesn't have to be, you don't have to be a tech founder, and those products may not be talked about as much. But if you look at examples like Shark Tank, they only have physical products. And so I think that's something I would, even though it is a TV show, and of course, not everything is realistic of the way VC truly works, there are some great lessons there. But I would tell founders is that think about Shark Tank and say, hey, there are investors that are going to invest in these types of physical products.
Yeah, absolutely. I tend to agree here with you. But honestly, regarding Shark Tanks, it seems to me that they've brought some good lessons,
Yes,
as well as a lot of misconceptions, because you're
very
assuming
true, 100%.
that like you're gonna pitch and you will get answers right away. I'm ready to
Yes,
invest in you, and that's definitely not the case, right? The
yes.
life cycle of investing and building relationship will take some time, and it's not gonna work like that. Like, yes,
Exactly. And that's
yeah,
that's a great point. I'll just touch on that briefly before we move on to the next question. But on Shark Tank, like you said, it's very quick. One thing that people don't know is they actually do a lot of diligence, outside of the show. So it looks like they get an investment on camera, but if the diligence doesn't go well behind the scenes, then it won't work out. And I know this because I'm a huge fan of Shark Tank. I've seen every episode. It's kind of what got my interest in VC. But a typical VC investment process, for the founders who are listening, it can range. Some firms, it takes a few weeks. Some, it could take a few months. It just depends on the stage of investment, the amount of diligence, and what they're looking for. So just for founders to understand, like you said, relationship building is key. And it will really help you get an investment if you build the relationship before you need it.
Yeah, so can we touch base a little bit? What is due diligence and how it look like? Because a lot of folks, I'm pretty sure, have never even heard about due diligence before.
Yes, absolutely. So due diligence is the process where investors decide if they should invest in a founder. So what I mean by that, I'll kind of break it down. So let's say you've done the pitch meeting. You're like, hey, this company sounds cool. I want to invest in them. But they want to make sure that the founder is actually telling the truth, because oftentimes founders get very, very excited about their company. They'll say, hey, like, I've got this great vision. I'm going to make $1 million in sales. But the investors really want to make sure, like, are they telling the truth? And so that's what the purpose of due diligence is. That's where they ask the founder to send them their data room. They're going to do reference checks. They're going to look at their financials. They're going to say, like, okay, do you really have these customers? And so that's where it can take a lot of time, because the VCs really want to make sure that, the founders are telling the truth. So that's really important for founders too, because I've worked with some founders who don't have organized data rooms, and that can actually, like, that can be a really bad thing, because you could have a great company, but VCs are so specific on, like, what they look for, and every VC wants something different. So my advice to founders is just making sure that your data room is organized, you are prompt in the communication with the VC, and you're basically doing what they're asking, because, if you want to get their investment, you need to make sure that you're building a good working relationship from the beginning.
Yeah, absolutely. And for the folks who also never heard about data rooms, that's basically the spot where you're collecting all the documents connecting to your business, finances, everything, like legal stuff and things in one spot that might be organized in different way, that might be stored in a different locations, but nonetheless, it has to be organized information about your business and all the data connected to it. That's why it's called data room, basically. So you mentioned a couple times that the process of due diligence by itself is basically to figure out whether the startup founder or the business owner, because the folks who are getting funded, not necessarily startup, right? Founders are telling truth. So I assume that this whole, I don't know, culture or environment fulfilled with the fake it till you make it is still out there, even after like Theranos and all other cases. Are you still seeing it?
Absolutely. And that's what's unfortunate is, while respecting the confidentiality, I'll just kind of generalize here, but there have been cases where I've heard of companies, I've worked with companies where they've said that they have a certain amount of revenue. This is actually a really good topic I want to touch on. So oftentimes companies will say, okay, we have, let's say, $100,000 in revenue, but sometimes that's like consulting revenue. And by consulting, meaning just providing services unrelated to the business, but it's not the actual revenue for the company. And so this is where companies can kind of distort how much money they're actually making, as well as if they're actually doing GAAP-based accounting and they're properly explaining what their revenue is. So there's certain things where it's like, technically you could say that this is your revenue, but it's actually not. And so that's why diligence is so important. So like I have seen cases where founders will either flat out lie or kind of distort the truth. And I think it's unfortunate too, because sometimes founders don't need to lie. They just think that they need to do it to compete. But the truth is, like, the truth is the truth will come out. Like VCs were very good at like spotting, okay, like someone's lying. There's a little like, even when you're like, this is something I really like on Shark Tank, is where like the sharks will really get the answers out of the founders. If a founder is like trying to beat around the bush, they'll just completely like they can tell. So this is where like you don't want to lie to a VC, because they're so used to like doing this line of questioning of like, how many customers do you have? Why is this not working? Why is this working? So I really think like founders do it. They just need to stop doing it so much and just be confident in your business, because there's like you founders, like you have a really great business most of the time. You're just sometimes get a little too excited, I would say.
Yeah, that absolutely makes sense. But if we're gonna get back to the first situation I've like shared with you with the folks who didn't even heard about like VC or anything like that, are you bridging that a gap anyhow? I mean, I know for a fact that VC as well as startup founders are trying to find VCs. VCs are trying to find the best startup founders. So how are you connecting with the folks who've never even heard about like venture
Yes.
capital or like what does it even mean?
That's a great question. So typically, if you're a good VC, the founders will find you. And the way that we kind of connect with them is, well, there's two ways. So, well, actually, well, there's more than two ways, but I'll just talk about two ways. So one way is I'll reach out to founders and be like, hey, I've kind of been keeping up with your business. I've heard about you in the news. Like, I see that you're bootstrapped. Would love to kind of understand if you want to get another type of funding. So there's that approach, but also founders that are doing very well in their business, they may never have heard of VC and they're so deep into bootstrapping, but then one day they say, hey, like, I want to scale very quickly. And then they start reaching out to VCs. And either approach is good because, whether you're doing direct outreach or founders come to you, either way, as long as you're approaching it with like, let's build a good relationship, I really like that approach.
Yeah, absolutely. So talking to you, like we will get back to the relationship because we already kind of, started to
Yes.
discuss this topic at least twice, and I'm here with you. It is super important to build the proper network and relationship and know how to deal with the stuff and thing. But let's touch base a little bit of the different types how you can get connected with the VCs, because not necessarily you have to try to call or cold email to them, even though sometimes it can work, right? But there is also this, I don't know, bridging steps or something like that, such as incubators, accelerators, etc. I believe that there is still tons of like accelerators for non-technical products, for like as you mentioned, right, physical products, etc. But the like majority of voices and opinions I'm keep hearing here and there is like, well, first of all, we don't know what is that. Secondly, like they're asking us to invest our time, like give us like or spend with us 12, 13, 15 weeks. It depends, right? From 8 up to, I don't know, I've seen believe 130-ish weeks. And
Wow.
that, right. And then you're promising nothing in return. You're saying to me that maybe you will invest in me tiny amount of money, which I not necessarily need. So why on earth should I be interested in accelerators? And I have my own opinion because I was participated in accelerators, but like, let's skip that for a moment. And like, I'm really interested in yours opinion.
Yeah, absolutely. So I think one thing I'll touch on first because I do want to kind of explain in incubators and accelerators. But I think they all play like incubators, accelerators, VCs, they all play a really important role in the ecosystem. Incubators and accelerators are very similar. Sometimes, sometimes an accelerator will call themselves an incubator and vice versa. But typically incubators and accelerators are very, very early. They come before the VC funding. Incubators are like where basically a supportive environment. They come with like mentorship, office space. Accelerators can do something similar. But they're more focused on kind of taking a company to the next level. So like bridging that gap, like you mentioned, where it's like, okay, you're ready to scale. Let's get you ready to get VC funding. There's a ton of great programs out there that are kind of within this stage. So you have Plug and Play, you have Antler, you have Generator, like really, really great programs. And, I've heard great things about them. But what I would say is that as a founder, if you're deciding if you should participate in an incubator or an accelerator and you say, hey, like, do I really want to dedicate all this time? Will I actually get an investment? Because some don't guarantee investments. You need to do your due diligence, not only on the accelerator in terms of the value they're providing in their network, but also on the companies they've invested in and worked with. So one thing that you can do is you can reach out to the founders that have gone through the program and just be like, hey, like, what are your thoughts? Like, did this help you? Were you able to raise a round after doing this?
Yeah, absolutely. That makes sense. And honestly, my opinion about like accelerators, I mean, maybe I got lucky, I don't know, but uh first of all, for me, that was the investment, my time into get knowledge. and
Yes.
to get tons of amazing mentors, classes, tons of answers to my sometimes stupid questions. And that was opportunity to also connect and collaborate with the other folks, with the other startup founders who maybe feel exactly uncomfortable as I felt at the moment of a time. We all were there, sitting at the same boat. And that was awkward moments, but I've learned so much that I was absolutely happy that I've joined like this accelerator at that specific moment of a time. Maybe not necessarily all the knowledge or ideas I'm using right here, right now, but still, I started to build my network, my connections. This is basically one of the ways how I essentially met you at some point of a time. And
Yes.
I do not even remember at what networking event, but here we are today, right? So it seems to me that this is the perfect time and get back to the question of the building relationship and network. In your opinion, what should be or might be the most important thing? Because you cannot be focused on everything, right?
Yes.
You cannot be focused on make sure that everybody gonna love you. That's not gonna work that way.
Yes, this is a good question. This is one I've been thinking about a lot. In terms of building relationships, my advice to founders is to build relationships with investors at least 6 months before you're planning on raising. Because then when you're building the relationship, it starts out as a genuine relationship instead of a transactional relationship. So what do I mean by this? I mean that when you do that initial outreach, you say, hey, I have this startup. I want to learn more about who you are as an investor. I want to keep up to date with you. I want to send you my progress, but I'm not asking you for anything in return at this point. And so over time, they get to know you. When the time comes and you're asking for money, they're a lot more receptive to you. Even if they say no, they're probably going to give your business or give your pitch to somebody else. And that's what is very important. And I think to build these genuine relationships, it doesn't only start with maybe sending a cold outreach message. What I've found is I've met a lot of great founders at networking events, and that's a really good, like, safe space to meet investors as long as you don't try to pitch them your company. You can just be like, hey, I'm a founder of this company, but I don't really want to like pitch you my company right now. I just kind of want to learn more about you. The VCs will love that because you know how many times I've been pitched at events when I'm not in the mood to be pitched. Like sometimes it's fun, but like other times it's like, hey, that's not the point of this event. I just want to get to know you. So it can be very like there's a strategic part, right, of like reading the room, but just knowing where investors are going to exist, going up there and showing up at these events in a very casual setting, that's a great way to build that relationship. Like one way I've built relationships with investors, I mean, to be fair, like I'm on the VC side and not a founder, but even in the beginning of my career, I would say, hey, like here are some of my really interesting hobbies, and I would lead like that. So for example, I love to go to arcades. I can win at any crane game, and people are like, that's cool. And so that builds
It
that
is.
conversation. Yeah, like I have so many stuffed animals because I've won all these crane games, and I relate this because it's like your hobbies can relate to business. And so just finding something unique and memorable about you can be really cool.
Yeah, absolutely. I'm here with you. But by mistake, I was forced to join the startup grind basically this year and wearing my onesie, like skeleton onesie. That wasn't the I wasn't planned that. It's just so the like my like airlines just lost my baggage, so I was forced to get to a startup grind wearing exactly what I was wearing at the airport, and I love to wear onesie. So everybody since like startup grind keep putting the subject line in the emails like onesie wearing founder. Like, well, okay.
That's awesome. That's such a great story. Like, see, that's a perfect example. Like, I'm gonna remember that story. It's memorable. And also people see that you're fun and you're approachable too, because then a lot of people come and talk to you. Like, I love that.
Honestly, I mean, first 15-ish minutes was like, presumably has to like pitch over here. I'm presumably has to look, I'm more or less serious, but here I am wearing onesie. And like 15 minutes later, I was like, you know what? I don't care. I have great product. I love to be here. It's all gonna be good. And yeah, I mean, I built a lot of relationship and not only with the like VC, but also with the other founders who were like, I remember you. You were the one wearing from onesie. And like, yeah, exactly. So that was very, very cool experience. And yeah, I'm here with you that not necessarily has to or try to be very transactional, because sometimes I can see that, like face like of VC at the middle of the event, like they're like just not there anymore. They're like, okay, so here's the waiting line. Okay, next. Next. And I'm pretty sure that like after 5 of these speeches, they cannot even say the difference. Like they cannot
Yes.
even remember faces. And that's not about like that we see as being like, bad person or human being. It's like, just try do it yourself. Like memorize 10, 15 different people in a row. That's like a little bit hard to do. But still, they're like circling a lot of, ideas of kissing frogs. Like sometimes you're connecting with the bad for you. We see sometimes we see can act weird, to say at least, and like sometimes founders can act very weirdly. But I mean, have you heard this idea of kissing frogs and like how many frogs you have kissed before? So how
Yes.
many frogs?
Yes, so specifically on a number, and I'm gonna estimate here because I don't remember the exact number, but I think it was like maybe 100 or maybe like 120. I'm trying to think. I'm like looking up into the sky and I'm like, what's that number? What's that magic number? But
Looking for
there's like
frogs.
exactly looking for frogs. But like yes, there are a certain number of frogs that you have to like basically kiss in order to say, okay, which is the right one? Because as a founder, when you're reaching out to these investors, the percentage of them that are actually going to respond, and then the percentage that are actually going to like move you throughout the process. It's like that funnel, right? It keeps getting smaller and smaller. So it's a lot, and there is a rule, and I'm gonna have to like I will find it, but I think it was 100. It was like a certain number. When you reach that point, you kind of know if like, hey, this is a good business, there's interest or not. And until you reach that number, you can't like give up. And I think that was the advice that was kind of told to me to tell the founders. But it's very true, because I think a lot of times founders will hear like maybe 10 no's and they'll give up, and they'll say, hey, like no one likes my company. And it's like, well, I ask those founders and I say, let's sit down and let's say, okay, like how did you reach out to them? What happened? Were they truly a fit for you? And and maybe they all could have been a good fit in terms of the research and what I advise founders to do, but more likely than not, you were just sending out a cold message and you weren't doing your research and it wasn't personalized. And so I really say, like, before giving up, really look in yourself and say, did I do the right research? And could it be done better next time? And if the answer is yes, can be done better next time, you got to keep trying.
Yeah, absolutely. Like 100 frogs in what time frame? In a
Yeah. Oh,
day, in a month, in a year? Because
yeah.
I mean, the density of kissing can be different, right?
It can be. And I think it's also too to keep in mind that fundraising is a full-time job. Like I've helped companies fundraise, and it's been a process. Like having like even just doing that like part-time for a little bit, and then like as part of a full-time job while I have other responsibilities. Like I have so much respect for founders, because it's a huge time commitment with the research, the responding to emails while trying to run your business. And I think to answer your question in terms of the time period, it really does depend on the stage of the company. I think for early stage companies, you're trying to get that as fast as possible. Like you're trying to get as many meetings. But I mean, I'm assuming if you're desperate for money, you're doing it very quickly. If you're more kind of like casually like, hey, let's get the money within a few months, and your runway, you have you have a lot of runway, you're okay. But I think like it's just going to take a lot of time, honestly, to get to that point, and just staying positive. This is why it's also good to have another co-founder, because you need someone who can kind of like run the business while you're like, oh my gosh, I need money, like let me reach out to investors.
Yeah, absolutely. And I really like the idea you mentioned, like when we've started to talk about like kissing frogs and etc., that you have to do your research and like you have to basically do your due diligence, right? Whether
Yes.
this is a perfect fit for you or not, etc., etc. So if we're talking about like 100 frogs, all right, I'm okay with that. I'm cool. I'm not, but I mean, 100 frogs, that's a lot. But like, what would be your advice? Like, for example, kiss 10 frogs then stop and like, revisit all the results. I don't know, maybe redo your call outreach messages, yada, 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 and then kiss 20 more frogs and then stop again. So what should be those batches?
Yeah. So for this question, I want to say it depends because I think it depends on
Such
how
a
experienced.
consultant answer.
I know, and I hate that, but it's so hard because I'm like, I want to say here's the answer, but the reason I like to say it depends is because like, we'll take two examples, right? So we'll look at the founder who's very inexperienced and there's nothing wrong with being experienced. It's just the first time doing that. So I want to be very clear, this is not a negative thing. But they're new to fundraising. And so to this founder, I say, okay, start out with 10, like you said, that's a really good number to start out with because you're kind of testing the waters and seeing what works, what doesn't. And I kind of like to think of it as like fail fast, fail forward. That's a phrase that one of my old teachers had told me of like, you really want to figure out what works very quickly and you just keep iterating. It's like when you're developing an MVP and you're like, this doesn't work, let's keep going. So that approach is really, really good. Now, if you're really like an experienced founder and you know exactly like how to raise, you've raised before, maybe this is like your seed round and you've already raised the pre-seed round. In that case, I'm more inclined to say, okay, maybe like reach out to maybe like 20 or 30 investors and say, hey, like we have a good process going. We just need to get all the messages out. And of course you can improve along the way, but if you already have a process that works, you'd want to send out more messages quickly. Now for both of these cases, I want to be very clear in saying by sending out messages quickly, I don't mean saying mass emails because it doesn't matter how good your business is, a mass email is not going to work. Take time to personalize each message. You're going to have a higher response rate and you're going to be less frustrated. So just, those are two cases. Like I said, it depends, but I think this is where, as the founder, you say, what works for me in my situation? And this is why it's so hard when I meet with founders because they do want like a very clear answer, but oftentimes it depends.
Yeah, I got it. But I really like the idea of personalized emails because honestly, after this race, I don't know, that it feels like that it was a huge wave of AI related tooling, which are promising you super personalized cold outreach emails, which end up to being like, hey, dear friend. I'm like,
Yeah.
or I was inspired what I've seen in your LinkedIn profile. I'm like, yeah, right. What exactly? Like, huh? So yeah, I'm here with you. Just if you really want to connect with this particular person, show why. Do your
Yes.
homework, right? Doesn't really matter whether you were trying to connect with investor, next vendor, or even trying to, I don't know, sign a contract with the B2B, right? As the B2B, you still has to be personalized. But yeah, I'm here with you. So getting back to a little bit, right, to the like 100 frogs and all these setbacks and rejections, what might be or what would be your advice for the founders, like, how to deal with all of that? Because it's a lot of pressure, especially if you need to find money to deal with the setback.
Yes, this is a really tough one, and this is something that I've seen a lot of founders go through, even very strong founders, especially like I think not as much now. I think like with the fundraising environment, it's a little bit better. I'm not saying it's perfect, but previously, hold up, let me grab some water here. Previously, in the fundraising environment when it was really bad, what I would tell founders is I would say, hey, like think about what's important to you and why you're starting this company and think about the mission. Because I think like oftentimes, like whenever you're really like heads down in a business, you lose sight of like what's important sometimes because you're like, hey, I need to make money, like I need to provide, and that's great. But when times are tough, and I've read a lot of really inspiring stories. I actually read a book last night called Permission to Dream by Chris Gardner. Just want to throw it out there. Great book, very inspiring. He's an entrepreneur, but when times were really tough, he thought about what mattered most to him. And at one point it was providing for his son. And so I think like my advice when times are really, really tough is think like, why am I doing this? What's my mission? And that is going to, shine through, right? Like it's not about, oh, I want to make a lot of money. It's I feel so like intrinsically motivated to do this. And so, and that also is something I do too, because I've had times where it's like hey, like things are a little bit tough for me in different capacities, and why am I doing this? And how can I motivate myself and think about the future and dream that something will be better? And that was kind of the whole point of this book. And so that's why I was like very inspired by it last night. I actually read it all in one sitting because I couldn't put it down. And I think that's a really great book just for entrepreneurs, because it's like things are going to be tough and you just have to keep going. Now, there are also times when sometimes it's better to close the company. And I think that is also where like you just have to figure out your situation. So I don't want to say like keep going no matter what, because as much as I want to say that, there are times when if you're really deep in debt or like you're about to lose your house, I think there are times where you need to be realistic. But for the most part, like persevere, but to a point where it's realistic, because I want to be very honest to founders and I don't want to like sugarcoat anything.
Oh yeah, that's super important because like yeah, sometimes especially, and I got it. If you're like on a VC side, you cannot, as you mentioned, right? Oftentimes you cannot give very strict and specific answer. You cannot say something like, I'm sorry, I'm just
Yes.
that's not gonna work. Not only for me, that most probably just not gonna work because founder will and have to, I guess, figure out that type of things by themselves. Let's touch base just a little bit about like how should you prepare to get funded? Because like we've talked about like how to build the network and how you should deal with all of that, and that you have to kiss at least 100 frogs, maybe 10 at first, maybe 20 at first. This is full-time job, but to make it, I mean, the word by itself, job, means that you have to do something. And my wild guess gonna be that not only research, right? You have to basically get yourself prepared. As for the marathon, you cannot just like wake up at the morning like, well, today I'm gonna make it happen, right? No matter how like inspired and motivated you're gonna be, if you never ever run, most probably you're not gonna make it. There is chance, but still. So like, what is the way to get prepared when we are talking about like, preparation to get funded?
Yes. So what I would say, and I talk like this is one of my favorite topics because I have a whole presentation where I go through this and it's like very detailed. But to kind I'm trying to think of how to sum it up. But I think what I would say to founders is that the most important thing is to remember it's a process and kind of think about it in like 4 different phases in terms of like the process of outreach. So there's like doing your research, there's actually reaching out to investors, there's tracking the progress, and then there's like iterating. But one thing that I would say to founders, like, in this very like short answer, is coming up with like a little CRM system to kind of track your outreach and track your progress. So Techstars has like a really good one, and I believe it's still accessible, but I think it's like called like the Founders Toolkit or Fundraising Toolkit or something like that. But the reason this is so important is like, you can do all your research, you can make sure it's the right stage, it's the right industry, they haven't invested in a competitor, things like that. But when you're reaching out to all these investors, they're going to be like saying, okay, follow up in a week, or I'm on vacation, like let's chat in a few months. But then the ones that you actually do talk to, they're going to say, hey, like, here's my feedback to you. We're not investing now, but maybe in a year when you have more progress. So tracking all of this is so important. And I have actually done this for some of the companies I've worked with. And this is so valuable because now I can look back and go, hey, like, this is the feedback that was given to the founder. And I kind of track this too in my own career when I'm reaching out to people and they're like, hey, now's not a good time, follow up later. Making sure like one thing, and this is a sales tactic too, is people often like, a no is not always a no. Like sometimes you have to keep pushing. And so this is kind of why, as a founder, having this outreach, like spreadsheet, the CRM, whatever you want to call it, is so valuable. And so that's like something I practice what I preach. Like I have a way of tracking my meetings. I track what people say. So that would be kind of my like very brief advice. But of course, like I give a whole presentation on it. So that's just a short little summary.
So like folks, if you want to get that presentation, connect to Sarah. I'm going to leave all the contacts and etc. And I'm sure that you're going to love it.
Yes.
And to wrap up like on a positive note, because we were just like talking about being organized, kiss frogs,
Yes.
do your due diligence, do your research, and that was a lot of pressure. So let's talk about like funny thing, or like great stuff and thing. So you've been like around from like 2019, and like what is the, I don't know, the huge proud or the company you're totally in love with, you met like with them, maybe early on, and now you've seen their progress. I like, if you want to skip the name, feel free to do that, but like, share that.
Absolutely. So I'm going to answer this question and then give a different answer too, because I like to kind of be very creative in my answers because that's kind of my personality. So there is one company that I really like, and I am not gonna say the name just because I want to be very respectful in terms of their progress. But it was this founder that I had, I did a cold outreach message to a while back, got to know her. She's doing so well right now. I'd introduced her to a few investors. I was like I did an event with her, and that was like really exciting. Now, I'm not going to say that's my like proudest moment in my career because I like to say I try to love all the companies I work with equally. But for me, what's been the most proudest moment in my career personally is all the people I've gotten to help, because to me, that's like why I'm in this industry. So I
No
created
ugly children.
yes, all everybody, young and old. And I had created my own personal brand to kind of like organize all of the work that I do. And I have this mentee who I've been working with, and I helped him get like a few entry level like VC roles. I've worked with some founders and I've given them some advice like on getting fundraising. I've talked with a lot of like underrepresented founders and underrepresented aspiring VCs. And that to me has honestly been the most like my favorite part of what I do, because I'm really trying to decrease the funding gap. Like that's my whole reason why I'm in VC, because to be very honest, like it's still very hard career, hard for females, right? And so like I just get very passionate about what I do because I want to make VC seem less like less inaccessible, so more accessible to people who want to raise capital or want to get in the industry. So like that's my like proudest moment, and that's why I do what I do.
Oh yeah, I'm absolutely here with you, because like I've started as well as like, serving of like historically underrepresented groups, and basically any and every group you can like imagine when you're thinking about like minority, or I really, really love the new term, new majority,
Yes,
because like
I
that's
love
the
that.
way, right? That's like wording matters, and that's
Yes.
how we can show this respect and this understanding of the situation, because the diversity really, really matters, and the numbers like showing and proving this thing very clearly, right? That the companies, doesn't really matter like what type of business we're talking here about, but like the companies who has that diversity in their ecosystem, they're gonna win the run. I mean, long run, right? So you have to stay smart. So thank you so much for joining me today. That was Sarah Romanko. So once again, she has amazing presentation about like how to be prepared to get funded. And I will leave all her contacts below this video. Stay with us, subscribe, and see you next time. Thank you so much, Sarah.
Absolutely. It was great to be here.
Likewise.